Hello! Today we'll be talking about building and maintaining good credit. Whether you're just starting out or you've had credit for a while, understanding how credit works is an important part of personal finance. Here, we'll cover what credit is, why it matters, how to build credit, and importantly, how to maintain good credit. First things first, what is credit? Credit is the ability to borrow money or obtain goods or services with the promise to pay later. Essentially, it's a way of borrowing money that you promise to pay back with interest. Credit is used for things like buying a house or car, getting a loan, or even renting an apartment. Your credit history is a record of how you've managed credit in the past, and it's used by lenders and creditors to determine whether or not to extend credit to you in the future. So, why does credit matter? Having good credit can open up a lot of opportunities for you. It can help you get approved for loans with lower interest rates, which can save you money in the long run. Good credit can also make it easier for you to rent an apartment or get a job, since many employers and landlords will check your credit history as part of the application process. So, how do you build credit? One way to start building credit is by getting a credit card. If you're just starting out, you might need to apply for a secured credit card, which requires a security deposit that serves as your credit limit. This is a good option if you don't have any credit history yet or if your credit score is low. Once you have a credit card, use it responsibly by making small purchases and paying your bill on time every month. This shows lenders that you can manage credit responsibly, and it will help you build a positive credit history. Another way to build credit is by taking out a loan. This could be a personal loan, a car loan, or a student loan. Just like with a credit card, make sure you make your payments on time every month. This will show lenders that you can handle different types of credit and manage your finances responsibly. Now that we've covered how to build credit, let's talk about how to maintain good credit. The most important thing you can do to maintain good credit is to make your payments on time. Late payments can have a big impact on your credit score, so it's important to stay on top of your bills. If you're having trouble making a payment, reach out to your lender or creditor and see if they can work with you to set up a payment plan. Another way to maintain good credit is to keep your credit utilization low. Credit utilization is the percentage of your available credit that you're using at any given time. For example, if you have a credit card with a $1,000 limit and you've charged $250, your credit utilization is 25%. Ideally, you want to keep your credit utilization below 30%. This shows lenders that you're not relying too heavily on credit, and it can help improve your credit score. It's also important to note that building good credit takes time, so be patient and consistent in your efforts. Avoid taking on more credit than you can handle and don't close old credit accounts, as this can shorten your credit history and lower your credit score. Finally, make sure you're monitoring your credit report regularly. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. Review your credit report to make sure there are no errors or fraudulent activity. If you do find errors, reach out to the credit bureau to have them corrected. In addition to the tips we've covered, there are a few other things you can do to improve your credit score. For example, if you have a high credit utilization rate, you can try paying down your balances or requesting a credit limit increase. You can also consider becoming an authorized user on someone else's credit card, which can help you build credit without taking on the responsibility of making payments. It's also worth noting that there are some things that can hurt your credit score. These include things like missed payments, defaulting on a loan, or having a high debt-to-income ratio. It's important to be mindful of these factors and take steps to address them if they arise. Finally, it's important to remember that credit is just one aspect of your overall financial health. It's important to have a budget and live within your means, save for emergencies, and invest for your future. By being responsible with your finances and managing your credit wisely, you can set yourself up for long-term financial success. In summary, building and maintaining good credit is essential for financial success. By getting a credit card, making payments on time, keeping your credit utilization low, monitoring your credit report, and being patient, you can build a positive credit history that will open up many opportunities for you in the future. remember to also be mindful of factors that can hurt your credit score and take steps to address them if they arise. With responsible credit management and overall financial responsibility, you can achieve your financial goals and set yourself up for a secure and prosperous future.